There's no better time than the first quarter of any new year to start planning. Inheritance tax, or legacy planning as it is most commonly known, can give the most reassuring feeling, knowing your life's work and savings are being passed on to the ones you love and for the benefit of your family and future generations. Everyone in the UK has what's known as a nil rate band. This currently stands at 325,000 and has been recently frozen by governments until 2028. Meaning that if your combined assets total more than 325,000, tax will be charged at 40%, and anything above that threshold, so for every £1 you save above that threshold, 40p is actually charged in tax. If you are fortunate to own your own home and you intend to pass this on to your children, grandchildren or great-grandchildren, therefore your bloodline, then you may qualify for the resident nil rate band, which again is frozen until 2028, and it currently stands at 175,000. This is an additional amount you can pass on at death without inheritance tax being paid. Combined, both of these reliefs could give an additional £500,000 at most before paying inheritance tax. As a couple, this is up to £1 million. I appreciate this sounds like a lot of money, and how could you ever have £1 million estate built up? But if for some reason a life or critical illness policy was to pay out, or the housing market has a boom, this could happen sooner than you think. How will your estate look at 2028? On the other hand, once your estate is above £2 million, the resident nil rate band actually starts to taper away, and this liability could be significantly higher. Through clever tax planning, these risks can be significantly reduced. A helpful tip I would like to share today is your annual tax-free gifting allowance, known as your annual exemption. You can gift each year up to £3,000 as an individual. If you're not in a position to do so this year, that's fine. You can roll that over until next year and therefore gift up to £6,000. But this is actually the maximum. So a bit like your ISA allowance, if you don't use it, you lose it. Alternatively, I would like to suggest an even better solution for the use of your annual exemption, and this involves whole of life insurance. Whole of life policies are designed to provide a sum of money to a client's family or their estate when a client dies. It can be set up as a joint life second death policy and will be paid into trust to ensure this does not fall into your estate or pass on any further inheritance tax problems to your family. By the sum assured being paid into trust and outside of your estate, this ensures the beneficiaries can pay any liabilities immediately and they don't need to wait for probate to be granted, saving them the heartache of trying to raise funds to pay that liability. Given recent interest rates, higher levels of cover are now being offered, providing even more value for money. If you would like to find out more, please do get in touch. It's never too early to start planning.